Good afternoon, my trading friends, brothers, and sisters. It is Friday, 3:20 Eastern Standard Time, and I want to bring you my weekly update just to show you where we are at. We've had some significant things happen in the market, both on the dollar, VIX, and stock charts. And I want to talk a little bit about my trades. What was I thinking and going short? What I'm still thinking, for all that matters, and where I think we go from here. All right, so let us just jump right in to the charts. We start with the dollar as always, and you can see here, I'm going to zoom in. The dollar has broken just today below that all significant number of 105.6, and which interestingly enough coincides directly with that 50-day moving average. All right, so we've just dropped below that today, and that is significant. We're going to have to watch this dollar over the weekend and into next week. If we stay below that 105.6 level, I expect the dollar to continue to descend. This was a big drop today, guys. This was huge for the dollar. And along with that, the VIX dropped significantly, as I predicted in several of my last posts. I'm going to zoom out here just a little. We have this ascending red triangle. And I was expecting us to drop from that at some point very soon. Sure enough, we hit that resistance at 21 and drop like a hot rock. So with the dollar dropping as significantly as it has, and the VIX dropping as significantly as it has, you can see the RSI indicates the same thing. Support was broken. We can expect that our stocks are flying, and sure enough, as I predicted previously, and I'm not going to take full credit for this because I'm just reading the charts. This is what the charts are showing me. All right, so we had this head and shoulders pattern on the SPY, and our target down was 410. Look at that, we hit that exactly. And what gave me a boost of confidence here is we hit that 410 marker exactly when we hit this support on our RSI. Look down here at this touch. That was exactly on the same day that we hit that 410. And that's why I put out a post saying we can expect a huge bounce from here. And sure enough, we got it. And in fact, as I'm looking at this right now, it looks like after that neckline was broken, we started to form an inverse head and shoulders pattern. This would be the left shoulder. Looks like we're forming a head here. We got the test of the bottom of that neckline that was previously formed today. And if this pattern continues, we should expect a drop into next week. Maybe we drop to the bottom of my channel, which would be perfect because that correlates or coincides with that 200-day moving average, which seems to be right near the bottom of my channel, which I just happened to draw. There was a couple markers, a couple candles that I used as reference, but that 200-day it continues to go right near the bottom of that trend line. That's telling me that we're going to come back down and retest that 200-day moving average. We like to do that in something I call kissing mama goodbye. And if that happens, this is what price action is going to look like. We go to the bottom of that channel, which coincides with that 200-day moving average, touch that, and then move up and break. This head and shoulders pattern will take us onwards and upwards to this blow off top, which I have been discussing for so long, maybe 6 months or so. This is wave 5 of the blow off top. Again, my expectation, guys, is that we beat the previous highs, which were set in December, January of 22. All right, and that we continue onwards and upwards to between 5 and 600. In fact, I have a level of resistance here at 550. Not exactly sure where I got that actually. Maybe that's just a target I have. I suppose I could zoom out far enough. Maybe I see it. I'll do that in just a sec. Right, so I paused the video, and that 550 mark is just the trajectory I'm expecting for this blow off top. the end of wave 5, I expect to end at or near 550 on the SPY. All right, so obviously we have never been that high before, and this blow off top would take us there. But before that happens, we are looking at a local top here, where we at the retesting that neckline that was broken on the head and shoulders pattern. That is definitely acting as resistance at this point. So again, into next week, we come down, maybe touch the top side of that 200-day moving average, bottom side of my channel there, before we continue our move onwards and upwards. All right, another chart we have been observing and closely monitoring is this regional bank charts. All right, so remember, we have here a line that we have existed above since 2009. All right, this has marked the start of our secular bull market, and as long as we remain above that, COVID-19, obviously excluding that data, does not count. That broke us below that neckline. All right, then as long as we stay above that, we are in a secular bull market. We still are. Yes, I know this feels like a bear market, but this is really just a smaller pullback on a larger secular bull market. All right, so, but we are flirting with disaster. The regional banks are. Remember, who holds most of the loans in commercial real estate? It is regional banks, right? All right, so since COVID, there have been a slew of vacancies, office spaces, etc., because that was our transition into this new teleworking approach. All right, so we are still experiencing lots of vacancies in office spaces, and that affects commercial real estate. We are just now seeing a wave of bankruptcies coming in. Who's affected by that? It would be regional banks. So regional banks are on the brink of disaster. Should the Fed allow them to collapse below this supporting line, we are in trouble. But right now, I think we're out of the woods for the time being, temporarily. What I see here is a double bottom pattern being formed, and I do think this will continue to play out. Regional banks will lead the market, guys, whether that be down or whether that be up. And right now, regional banks have hit their support, are bouncing tremendously. And I think we go up to the $64, $66 area. That is a massive incline, and that will pull stocks up along with it to this blow-off top. And we will continue market irrationality. All right, now with the remaining 12 minutes I want to cover some of these short trades that I made. As you guys know, I ventured out into stonks once again. All right, so what drew me into crypto in the first place was the pure psychology involved in crypto. We didn't have a lot of market makers, market movers, and big money in the crypto space in the beginning stages. So it was very easy to measure market psychology, which is what we're doing here with technical analysis. And you can see, and it was very accurate. It was a very accurate means of trading. All right. I got out of the market because market manipulators and market movers were just devastating technical analysis. They would know what the majority of retailers would chart out, and they would do the opposite. All right. But it was so tempting for me. And the reason I'm going into all of this, because we're going to see one more example of market manipulation. All right. So we have this very clear head and shoulders pattern. We have this very clear drop from this ascending channel. And we have this very clear gap, which acts as a magnet, and usually more than 90% of the time is filled sooner rather than later. Additionally, head and shoulders patterns play out 85+% of the time. And we had this drop from this ascending channel. all of these indicators gave me a high degree of probability. This break of the neckline right here, guys, I have it circled, all right, indicated to me that we were going down. This was a high probability trade, at least in normal market conditions without market makers and market movers. Algos, BlackRock, State Street, Vanguard, all the guys that like to steal your bags and leave you for dead. That's what happened here. We dropped below this neckline, and it was, by all accounts, a high probability trade that we would go down and fill that gap, but we did not. We confirmed the break of the neckline, and we remained in the 15%, probably less than that, because remember that gap is acting as a magnet, and we dropped from the channel as well. We remained in that very minuscule percent of probability that we would go up. And that's exactly what the market movers did with NVIDIA. I got to remember, though, Nancy Pelosi is in this trade. So, that skews everything. And I probably shouldn't have taken that trade. I got stopped out here. I don't know. I'll probably just leave well enough alone now, take my losses on NVIDIA, and continue trading crypto. Maybe look for trades in stocks that are not owned by the uber corrupt politicians and market movers, market makers. Maybe that's what I should do. Lesson learned. Moving on. Bitcoin here, I went short on this. Now, why did I go short on this? Well, there was a plethora of technical indicators indicating to me that we would drop. All right. Number one, we were at 89 on the RSI, right down here. We're up here at the time I entered this short trade. Very, very overbought. Rarely ever does Bitcoin go any higher than 90. Sometimes, on a rare occasions in raging bull markets, it might do that. But this is a bear market still. This is still what we consider a bear market in crypto, all right? So I thought, all right, based on that and the fact that we had reached our target on this head and shoulders pattern. Let me reduce the RSI here. Zoom on out. We've got this head and shoulders patterns. See, I've got measured top of the head to the neckline. I duplicated that, and that gives us our target for the head and inverse head and shoulders pattern. Our neckline of which was the ever pervasive 25,300. We have talked about that for, it feels like going on a year. And it probably almost has been a year, actually. So when I started talking about this, we were drawing it up from before we had even formed the right shoulder. All right, so that was way back in February of last year. So almost a year. Yeah, we have talked about that 25,300 mark. So anyways, we touched that twice and still had yet to make it to our target on the head and shoulders pattern. Well, guess what? We hit that target precisely on the day that Bitcoin hit resistance on the RSI down here at 89. All right, that was exactly when we hit our target up for that inverse head and shoulders pattern. In addition to that, you see this red line here? That is something that I started way back here in June of 2022. All right, that has been acting as resistance since then. All right, 1, 2, 3, 4, 5, 6, 7. Now 7 times we've hit that and have not broken it to the upside. So probability definitely remains in my favor here, guys, even though I still may get stopped out. I got my stops set at just over 36,000, somewhere up there, but I am concerned because we do look to be forming another little bull flag here. All right, so that tells me the market might like to go up and test the underside of that trend line once again. It's possible, guys, that we wick up, it stops me out, it liquidates some of these shorts, including myself, before we experienced our drop. And why do I expect the drop? Because we have not yet retested a break above 31,600. That is a very significant level. We touched that many times, and on the day I went short, that is the day, well, actually a few days after I went short, we broke that level. So I do expect us to come back down, retest that. That is a technically precise way of charting price action here before we continue up. We like to come down and retest, or go up and retest those significant levels and kiss mama goodbye, so to speak. All right, so and should that 31,600 break, we will go lower. All right, remember my prediction for the end of the year has always been 37,000. We have not met that yet. So really, if I was smart and if I believed myself in that prediction, maybe I would set my short stop at 37,000. But I guess what my idea here of this particular trade is if I do get stopped out, and if we do go to 37,000 somewhere in the future, that's where I would re-enter a short trade. All right, because at that point, I think for the year, the close of the year, 37,000 will be our high. What's going to happen next year? Well, we all know halving is coming. So we all know massive growth is on the way somewhere. But remember what happened last time before the last bear market? We hit 60,000 high. The low was 4,000. All right, so we had a massive decline before we started climbing again. Now, I'm not saying we'll go. I don't think we'll go. I think our lows have been hit at 16,000. So I really don't think. I think 16,000 is off the table. But we have a gap that needs to be filled here on the CME futures chart at 20,290. I have not put that off the table to be filled before we continue our next bull run. All right, so we could have some sort of geopolitical situation. We got many going on in the world. So this gap is very important because, you know, gaps are filled over 90% of the time, and that's a big one there at 20,000, a significant level. All right, guys, so enough said about that. I am watching this Bitcoin short close. Oh, I have one more trade here that I went short on, and that was Solana. And the reason I went short on that is because we hit our target. I have an inverse head and shoulders pattern drawn here, way back here. All right. Actually, it was drawn so long ago, I actually forgot about this, all right? We broke the neckline, came back down, retested the neckline. See what I mean about retesting these significant levels, guys? Retested it here. And then we were on our way up again, formed a bull flag, and I never thought we would get there so quickly all of a sudden, but sure enough, we did. Our target was $44.72. And in fact, the wick up yesterday was exactly that, or somewhere around there, looks to be. And I went short the day before, actually. When we hit that 44.72, that was our target. That's when I went short. I'm now expecting us to go down to $32, but I will take half the profit at $36.46. All right, that's where I'm going to take at least half. And then I'm going to trail my stops, making sure that I'm always in the profit during any stop out. I'm not sure where I'll trail my stop to, but I'll make sure I'm in the profit on this trade with the remaining 50%. Just let it ride. See if we get down to that $32 mark. Maybe we will, maybe we won't. But that is the way I'm playing that trade. All right, guys, so hopefully you found this video helpful and useful. And if you did, you know what to do. Comments always help me as well. And they help you because many of your comments are questions. And I'm not afraid to answer them. And if I don't know the answer, I'll say I don't know. So feel free to comment in wherever you're seeing this video on whatever platform. Until the next video, peace, y'all.